The order block strategy is one of the best strategies out there. However, so many traders get it wrong. They are not able to trade this strategy properly. Today I'm going to be showing you guys how to trade this strategy properly, not the SMC way, the way ICT teaches it, the founder, the mentor. So today I'm going to be showing you guys what is an order block, how to identify a valid order block, how to find high probability order blocks, and how to know which order block is valid. I know a lot of people are confused when it comes to order blocks. Some people trade it the smart money concepts way, which is completely saturated by now. Maybe it would have worked 2-3 years ago. 3 years ago, about every order block was respected. It was much simpler times. However, that is not the case in today's market. So I'm going to be showing you guys how to trade order blocks in 2023. So I'm going to be showing you guys about what you need to look out for and what we have to do different. So let's get into it. Before we get into the strategy, guys, I'm really excited to show you guys this guaranteed passing service. We will pass your challenge 100% guaranteed. If not, you get all your money back, the price you paid for the challenge and the cost you paid for us. We will completely reimburse you. You could be funded up to 200k, as this client has been right here. We've passed the challenge under 30 minutes. So if you want to be funded up to 200k in capital, join the Telegram, and then you'll see proof there and you can message me over there. This is honestly the best decision you guys will ever make. There's nowhere on the planet where you can give someone such a low amount of money and get 200k back. So make sure you join the Telegram and then message me over there. The link for the Telegram will be the first link in my bio, and I wish to see you funded with 6 figures of capital soon, so see you there. Before you trade an order block, we want to know what is an order block. So an order blocks refer to specific price areas where large market participants such as institutional traders have previously placed significant buy or sell orders. These orders are very large, so often absorb all the liquidity in the market, leading to displacement and inefficiencies in the market. Order blocks often signal that market may be reversing, as once we've taken out all the liquidity, market absorbs all the liquidity and moves in its desired direction. So with that in mind, what does it mean for us traders? Basically, an order block is the last up move before down move for a bearish order block. For bullish is the last down move before the up move. So in this example, this is our last down move. As you can see, it's our down move and up move. So this right here is our order block. How do we identify a valid order block? So there's 3 key steps which smart money traders will tell you, which is increase in volume, which can be seen by engulfing candle and leaving imbalances right here, which need to be filled by the market. So we know market is likely return to this area. No mitigation, which means no candle should be coming back into our zone, into our POI, and a break of structure right here. The order block is not valid without the break of structure, as it shows market does not want to move in the direction stated. So for example, this is our bearish order block. If there's no break of structure, we cannot tell if market wants to move bearish. So we would not take an order block without a break of structure. And to add, we do not take order blocks that have liquidity against them. As smart money concepts has become more and more saturated, we do not trade order blocks with liquidity against them, as market is likely to liquidate these equal highs before continuing in this desired direction. So do not take order blocks with liquidity against them. For our order block to be valid, we need to take out this liquidity first. So we would want market to take out this liquidity and then drop off, creating our order block up here once the liquidity has been taken out. As you can see, market is most likely to not respect this order block. And with that in mind, let's move on to how to outline an order block. So you want to use the indecision candles. What is the indecision candles? It's these candles right here. Why are they called the indecision candles? I guess because they're indecisive. So, and we only mark out the bodies of the candles. This is based on your time frame, because I know if you go on a lower time frame, for example, these wicks would probably be bodies on lower time frames. However, we want to mark out only the bodies of the order block. This is because these are significant levels where market is closed. Wicks just show the high or low of the session, 15-minute, 5-minute, depending on what time frame you are. Bodies signify where price closed, which is most significant for us. Now, there are many ways to refine an order block, so I will be going through this later in the video on TradingView, so make sure you stay tuned. As for times and pairs, now the order block does form on a lot of different times and it does form on a lot of different pairs. However, I recommend you guys trade on the New York session and London session. I even put the times here for you guys. I got London time below for you guys in the UK. And as for pairs, I recommend you guys stick to the major forex pairs, and as for indices, you can stick to the Nasdaq, as these pairs really respect order blocks nicely. So now I'm going to be going for a step-by-step breakdown of this order block strategy. As you can see, I put a slight summary of each step right out here. And step 5, make sure you guys stay tuned, as this is the most important step. So step 1 is our higher time frame bias. I want you guys to go into a higher time frame. If you're on the 15-minute, you want to go into something like the 4-hour, 3-hour, something higher, something more higher and significant. So you want to identify higher time frame bias, and you want to trade with the trend. So as we can see, we are forming lower highs, lower high, lower high, lower high, lower high, and lower high. And we're forming lower lows, lower low, lower low, lower low, lower low, lower low. So this clearly shows we are bearish. So we want to only be taking bearish order blocks, trading with the trend. We don't want to be trading against the trend, as counter trend trades can happen, but they are less likely to happen. So moving on to step 2 is our order block. So we want to mark our order block, a valid order block. So we need a break of structure, we need increase in volume. As we can see, we've left many imbalances here, which market may need to come back and fill. And our order block must take liquidity. I know it's not showing on this slide, but back here we had taken out a previous swing higher, so this makes our order block valid, and this is on the 15-minute time frame. In addition to this, we have a little bit of equal highs right here, which market would probably come back out, take out, and leaving and come back into our induced area of demand right here. So this adds more confidence to our order block. Now step 3 is our lower time frame confirmation. Once market hits our higher time frame order block, so we want the 15-minute, this is a 15-minute order block, we want to hop onto a smaller time frame, a lower time frame like the 3-minute. So, and then we want to find another order block on the lower time frame. So we found another order block on the lower time frame, and the reason why we do this is if market respects demand once, is likely to respect it again. Market is very repetitive. This increases our win rate with this strategy. So once we found our lower time frame order block, they are often smaller. In this case, I know it's not, as I just outlined the wick as well. I do this as I'm going to place my stop loss above this wick anyways. So at this point, you don't need to do anything. This brings us on to step 4, which is our entry. You just want to place your limits, and you want to enter aggressive off the lower time frame order block, stop loss above the swing high, and you want to target opposing liquidity. This can be equal highs, equal lows, relative lows, any opposing liquidity you see. That's where you place your take profit. And with take profits, I normally partial. I recommend you guys partial as well. So you could partial right here, for example, at these lows. However, that is all up to you and your risk management strategy. However, I do recommend you partial, as if you are trying to catch big moves with the order block strategy, market may not always move 100 pips, 200 pips. So make sure you guys are partialing. This brings us up to our favorite step, step 5, which is the money step. Just wait for your trade to play out. This strategy is amazing. It has an insane risk to reward. Risk to rewards are 1 to 7, 1 to 8, 1 to 10. I've caught 1 to 50s with this strategy. I've had people catch 1 to 50s. It's just an amazing strategy. You get sniper entries with this order block strategy. Most of the time you are barely in any drawdown. Now I know my stop loss was way up here. I could have placed it here and I still would have been triggered in without getting stopped out. As you can see, there's a couple pips of drawdowns. So moving on to a real market example, I'm going to hop onto TradingView and show you guys a couple examples in the market. So let's get into it. Alright, so I'm on the Nasdaq currently, and this trade just happened today, 17th of August, as you can see. So I'm going to be breaking down this trade for you guys, which ran a nice 1 to 11. So let's get into it. So firstly, I'm going to remove all drawings of my chart. And now I'm going to replay the market to about here, for example. So let's go into our higher time frames to check our higher time frame bias. So let's go into the 4-hour, set the chart. As you can see, we are clearly bearish. We have lower high, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. You get it. So market is currently bearish. So we can now drop down to a lower time frame. Here's where I caught this order block right here. This is a beautiful and very obvious order block. As you can see, we have an engulfing candle right here. We also have a nice level of imbalance right here. This shows market would want to come and return to this level. So We'd mark our order block from the body all the way to the body, and we would mark it out. From now, we just wait for market to play out and to hit our order block. Oh, and just to add, if I go into the 5 minute, you can see market has swept this swing high right here, taking out this liquidity before dropping off. So our order block has taken liquidity, which makes it valid. So if we go back onto the 45 minute now and play out market, you can see market taps in to our order block. I'm going to replay the market a bit and I'm going to drop down. Now I'm going to head over to the 5 minute. On the 5 minute, we're just going to wait. And as you can see, market has left this lovely area of demand. And this is valid. One, we've broken this low right here. We've broken structure. So that's our break of structure. Secondly, we have nice displacement right here. And thirdly, we have no mitigation back into this zone, all making this zone valid. So I'm going to mark our POI. And we'll place our limits from here. And wait for market to enter. We'll place our stop loss above the swing high. And where would we target? We'll target opposing liquidity. And we'll take partials. First partial would be here. Second partial here. And third partial right at this bottom here. So let's play out market and let's see what market does. Boom. We got a sniper entry right there. And market shoot it down straight away. This is a beautiful trade. And as you can see, market has run a little bit more. Just to go back onto 45 minutes. So to break it down for you guys again, engulfing candle, increase in volume, imbalance left, break of structure, market took liquidity before dropping off. So we marked our order block. Market entered our order block. We dropped down to a lower time frame. We got a lower time frame confirmation. We entered off that order block and we targeted opposing liquidity. It is as simple as that. And this is how you can be profitable today. Alright guys, I'm on USD and I'm going to be breaking down this 1 to 9 risk to reward trade for you guys and showing you why it did so well. As you can see, it's a sniper entry right here. So to start off, let's go into our higher time frame bias. Let's hop onto the 4 hourly. And as you can see, USD is clearly bearish. Lower high, lower high, lower high, lower low, lower low, lower low. So now we can drop back down to the 45 minute. And here's where I caught this lovely area of demand again. So as you can see, this area is valid. Firstly, we've broken structure. Let me label that for you guys. Break of structure. As you can see, we've had an increase in volume. As you can see, all the displacement, markets left imbalances, which market would come back to fill. And thirdly, we had no mitigation back into our zones. So now if we hop down to the 5 minute and go back to where our order block was formed, we can see market has swept liquidity right here. We had market sweep these equal highs right here before dropping off. So that's our liquidity sweep right there, which makes this order block valid. Let's hop back into the 45 minute. Let's hop back onto the 5 minute actually. Hopping onto the 5 minute time frame and let's replay market to when it first hits our zone. So as you can see, market has left behind a lovely area of demand right here. As you can see, we have an increase in volume. Let's play out market. There we go. Market will return back to our order block where we enter off this lower time frame order block. So it's as simple as that, guys. Entering off a lower time frame order block really increases your win rate with this strategy. So make sure you're doing that. And as you know, if I literally just play out the trade for you guys. Now I'd like to add, for this specific trade here, you can see market has reversed all the way back here. I know this would make a lot of traders panic and they'll start closing their position. So I recommend you guys just set and forget. It's as simple as that. Just set your trade and forget about it. Because the more you're looking at it, the more likely you are to exit early, change your stop loss, change your take profit. The more emotions you have in your trades, the more likely you are to fail. So just set your trade and forget about it. Now that's all for today, guys. I hope you enjoyed the video. I hope you guys understand. If you have any questions, just leave them down below. Thank you so much for watching, and don't forget to check out my Telegram for my passing service. If you guys want to be making real money, real profits in the market today, join that Telegram, message me over there, and you guys could be making real profits in the market within 72 hours. So thank you guys so much for watching, and I'll see you next time.